Let's find some day trades, swing trades, and option trades. Hello, traders. It is Friday. We are 3 hours into trading. It is July 10th. Let's take a look at what the market's doing. Pretty quiet day. I've been warning everyone that these are the dog days this summer. We're in a news vacuum right now. We had excellent earnings last week. Unemployment report, really good. ADP, really good. ISM manufacturing, ISM services, both in expansion territory. That news is behind us, and now we're waiting for earnings season to start next week. We've got major banks on deck. There are some opportunities I'm going to show you in the banking sector. And until then, we really don't have a whole lot to trade off of. The market's been trapped in a trading range. You can see yesterday we actually had some really nice movement. Man, we haven't had that for a while. And the key to day trading is to make sure that, number one, the stock is out of the first hour range. Unless you get a massive range like this, which that's the first hour, so we're out of it, that means we're going to have a pretty decent day. The second thing, if I go to a 30-minute chart or a 15-minute chart, is to make sure that we're through the prior day's range. So yesterday, this is yesterday right in here, you can see that the prior day's low had been eclipsed and actually the prior day's high had been eclipsed. All right, if we can get out of the prior day's range, we've got a really good chance for some directional movement and some decent trading on both sides. So that's exactly what happened yesterday. We had the 10P indicator telling us right out of the gate early in the open, look out, there's a shorting opportunity coming. When this low of the day was breached, you had a chance to get short. There's a nice bullish cross that's telling you to get long, and that long pretty much lasted throughout the course of the day. I should mention in here we do have something that's called a bullish divergence. The indicator is going down, down, down. Don't see it often, but when we do see it, this confirms the strength of the movement that we're currently in. So in this case, we had the market moving higher. Right there, you can see it, with the indicator moving lower. That is what we call a bullish divergence. When we get the next cross, the next bullish cross, it's going to be a good one. Right in there. Very, very nice. Get a little bit of a bearish cross right in here and a little bit of a pullback into the close. What's the indicator telling us today? It's telling us to stay long. Get this dip on the open right here. Nice rally. Okay, that dip is right there. So you get long in here, continue to ride higher. Indicator moving negative, although not by much. And the market's moving higher. That tells us this cross is going to be good. It's a very choppy market. It's not going anywhere fast. You can see how we did get through this little resistance level right here, but we are inside the prior day's range, which also doesn't surprise me because that was a very big range. So when we're inside of that range, it tells me that we're going to have a fairly quiet day. There's a little bit of upward bias to the market. Earnings season is coming up. The bid is typically strong for the market heading into earnings season. So we can expect stocks to gradually float higher. The expectations for mega cap tech stocks are super, super high. So yes, I would favor the long side. I'd make sure to trade very small size right now. Keep your trade count down. Look for a float higher, but very quiet trading. And next week when the earnings do start up, it's going to be mainly the big banks. Well, there's not a lot of interest there. The banks have been laggards, so not going to see a lot of fireworks off of those numbers. But in 2 weeks, when earnings season really cranks up, then we're going to have some opportunities. Then we'll be looking for post-earnings trades. There are some pre-earnings trades that are showing up, and I'm going to show you a couple of those in just a second. So for right now, what I want to do is I want to take a look at how we did with and this is going to be a good one here that I'll show you, MS, Morgan Stanley. Let's take a look at how the stocks from yesterday did. So I showed you Roku yesterday, and we were about right in here as far as the trading session. I said I really like the breakout. I think this is one that you'll want to day trade from the long side and one that you can swing trade overnight. And that was about at the 144 level. Hello. Stock has been up to $160 today. $15 rally since the video yesterday. That was lucky. Lucky guess, right? And I showed you SPCE. That was right in here, 3 hours into trading. Look at that nice move right there. It went from basically 18.10 to about, well, it hit a high of $20 today. So $2 move, almost a 10% move in the stock. That was just lucky, right? No, wasn't lucky. We have a systematic trading approach that we use. It has nothing to do with luck. So, what do I like today? Maybe today's going to be different. Today, I like Netflix. Netflix. I put on my Twitter feed, which I've been encouraging you to go on for the last week or so. There's my Twitter feed. And let's take a look. And there's Morgan Stanley. I'm going to show you that one. Oh, yeah. And then here's another one posted 2 hours ago. I'll click on that and I'll show you what I liked. I liked Netflix. And the price at the time that I posted that was at $523.77. Okay, $500, $23.77. Oh, we're up $15. Chat room members have been trading calls on this that expire today, and they've been making a killing on it. This is no surprise. This is what we do every single day. If you watch these videos every day and you track what I show you, you know that it's true. So I like Netflix. I also put on my channel, I put a Microsoft, or excuse me, a Morgan Stanley trade. And I'm going to show you how I found that one. And there it is, Morgan Stanley, tight compression. I explained why I liked it. Let's go in and take a look at that chart, see what's happening. We've got some nice relative strength right now in the banks. And you can see how the stock has gradually been floating higher. Look through the right-hand corner here. This is a market drop. You can see that from the 10P cross. We had members questioning this cross right here. I said it's too early to short right now, but it's telling you to lighten up on your long positions. That's how this works. So if you took profits on your long positions, you didn't get short, you're waiting. Yes, I think there's probably a small shorting opportunity right now, but as I just got done mentioning in the chat room before I started this video, I said the play really is going to be to wait for this move to come in, to find support, and then to reload on some of your longs like Netflix. We want to trade from the long side because I think that market support is pretty good today. We've had much better price movement on longs than we have on shorts, especially in the tech sector. So the play here is you ride your longs, you take profits when this starts to cross over, you let the market come in. When it comes in, then we start monitoring, we start watching for patterns that tell us that the support is in. We wait for the 10P indicator to bottom out, to drop way down. Then we get a bullish cross, and then we start banging away on those stocks that are showing relative strength, and we go into our relative strength 30 search. And then we start looking for stocks. So here we've got probably 30 minutes worth of market weakness. Relative strength 30 looks for stocks that have been strong in the last 30 minutes. So let's give it a click, see what we got. SPOT, you can see how it has an uptrend here when the market's down. I don't like a lot of the other charting pattern here, so I would not trade that one, but I'm sure I can find something I do like. ALT, I did very well on yesterday. Yeah, I like this. Look at that. The stock is up when the market is down. It's broken this downward sloping trend line. It is currently higher than the open, so it has been gradually trending higher. Yeah, I think ALT probably works here. Man, did I do well on this stock yesterday. ZM, also very, very nice relative strength. Look at that stock go. Market pulling back, stock moving higher. So let me get this right, Pete. I can get the market wrong and get the stock right and still make money. Yes. And if the market sell-off gets real severe, then the stock will start to soften. You get out. That's the edge that we work every single day, and that's how Option Stalker is designed. That's how we do it. So we're going to find a few other stocks, but I want to show you Morgan Stanley and why that looked good. So I think I had shown you this buy into earnings search. Every stock on this list has a tendency to rally into earnings announcements once it's inside of that 2-week window. These stocks have done it more than 75% of the time over the last 3 years. So they have a bullish tendency. They want to go higher. So this morning, I started looking through the list and I had noticed, look at this. BAC, Bank. C, Citigroup. Goldman Sachs, GS. JP Morgan. Morgan Stanley. All of these stocks like to rally into the number. They're all in the financial sector. Financial stocks are moving higher. So, take a look at Morgan Stanley. You can see how it's been grinding higher. In this case, we're not going to sell an out of the money bullish put spread. We don't need to. Financial stocks don't move very much. So there's very little premium in them. However, we can go in and we can buy in the money call options on these. I will tell you, they are trading at parity. So if I went in the money and the stock is at $49, I can tell you that that $47 call is going to be trading at $2. So you gradually ride that trade higher. And look at this relative strength right here. Market down, stock up. Stock getting through the prior day's high. I have people looking at the Twitter post that I made this morning going, how the heck does this work? If you come in and take the 2-week free trial, I'll teach you. Read my ebook, go through the manual that I have for Option Stalker, understand what the searches are looking for and when to use them, and you'll be on track with the rest of us. And this is not about me making money. It hasn't been about me making money for a very long time. It's about teaching you how to do it. It's about all the people in the chat room that you're going to see who have gone through the same learning curve who are posting fantastic trades. And when we look at each other's trades, you can go to the chart and you don't have to scratch your head wondering, gee, did they pull this one out of thin air? No, they're following the systematic approach. It's outlined. This is what we do. You post a symbol, you look at the chart, and you go, there it is. I like that one. Think I'll join it. That's how we're different than everyone else. So if you're looking for really good trading research, if you're looking for a fantastic platform, Option Stalker is certainly worth a look. Also, look at the comments that you see for all my videos. So without any further promotion, let's take a look and see what we've got working today. I think I also showed you TSM. I have not looked at that one today, but that was a really nice looking stock yesterday. It's pulling back today, but it had a really nice head of steam yesterday. That was certainly a good long early in the day, but it's given back part of those gains right now. You can see how the market's starting to recover in here. Now, if I were going to short this market, which I'm not going to, because it's very choppy in here, with this type of price action and this type of little pullback, this has a chance of being a bull flag, meaning you got a pullback and then the market shoots higher and challenges the high from the prior day. It's very lackluster trading right now. Now, from a short standpoint, I would not short this unless I had pullback, rally, and all of a sudden we hit a brick wall here with maybe a little poke through the high of the day to flush out some shorts, and then an inverted hammer or a bearish hammer followed by a red bar and the 10p indicator crossing lower. That would tell me that there's a decent little shorting opportunity, but I'm not looking at much happening right now. It's a dog days of summer. My job for everyone in the chat room is to keep you on the right side of the action and to tell you when you need to be in the market, when you need to be taking profits, when you need to consider shorting. Option Stalker does the rest because we've got all the searches and I teach people how to use them. So right now I think we're just going to be chopping around, not a lot going on. If you go into the daily chart of the S&P 500, you're going to see very tight price movement right in here. This is going to continue. Not a lot to drive the market right now. On the bid side, as soon as we get down to that 200-day moving average, buyers will be engaged. 1, 2 big tests. They want to buy stocks. They don't want to chase, but they want to buy stocks into those mega cap tech earnings. Well, what about rallies? Rally. No. What's keeping a lid on the market? Coronavirus right now. The number of new cases is spreading, and we've got a lot of states. In fact, 40% of the country's GDP is concentrated in those states that are still in phase three. That tells me that this economic recovery is going to take a lot longer than anybody had hoped, and it could start to raise some credit concerns. And I believe that as we get into the midway point of August, late August, those start to surface. So my personal bias is bullish right now for about the next 3 weeks until mega cap tech earnings are posted. I believe Apple is the last one, and I believe they post on July 30th. So once that optimism has run its course in the market, we get to the midpoint of August, I start getting more and more bearish. So right now, I am bullish, but I'm very, very cautious because I know that with every passing week, that upward bias is going to wane. See what else we've got cooking here. Let's take a look and see if we can find some other stocks. I want to get back to that 5-minute chart so that we can watch it out of the corner of our eye here. And I would not aggressively be buying until I saw what happens near this high right here. Okay, I want to make sure that the market's able to add a couple of green candles here, which I'm not seeing that happen right now. It's been able to hold that high right there on that closing green bar, but it has not been able to advance. If another couple bars elapse, that's going to be a sign of resistance and a sign that the next leg lower is coming. And so you would not want to buy stocks just yet. Now, if you're in the right issues, Netflix, that stock is probably still grinding higher. So let's take a look and see what we've got here. Heavy buying is one of my favorite searches. So we had Netflix out of the gate very, very early in the day, and that looks good. Goldman Sachs, I'd mentioned to you in the financial sector. Fantastic relative strength. Love this breakout through the prior day's high. It's still below the 200-day moving average, but getting close. Earnings next week with a tendency to rally into the number. Yep, like it. Roku continues to be strong. Like that. TSN, haven't looked at that one today. You've got a bullish engulf right in here. Earnings still quite a ways away. Needs to get through this downward sloping trend line right in here, which it's trying to do. Nothing too exciting on TSN. Walmart's been pretty nice. Choppy stock to trade, though. You can see this big spike up earlier in the week on the news that they're going to compete with Amazon. They're going to have a annual membership. We still don't know the details of what the annual membership is going to include. So I think that this might be a little bit of a fluffy move, but I'm okay with it because we are short and out of the money bullish put spread. Keying off of the 117 level, we've got one spread that's going to be expiring today. We're also able to sell another spread that expires on July 24th. So we're sitting pretty on that one. That'll generate a 25% return as long as the stock is able to stay above 117, which looks very likely now. So let me continue to go down, see if I see anything else that I like. This looks pretty good. SRNE. Got this breakout through $7.60. We can see it's been a high flyer before. It's been making steady progress in here. Gap higher today. Let's take a look at that 5-minute chart. Yeah, pretty good. Little pop here, little sell-off in the market here. These are the tells. This is what you have to look for. This dotted line lines up with this dotted line. Got a little bit of a sell-off by the market. Stock holds its own right here, starting to inch higher. Yeah, I think SRNE, nice cheap $8 stock, probably going to inch its way higher. But it's a mover. You can see it's got some long bars in here, so I wouldn't chase it. This might be a nice little entry point. You got a little pop in the market. See if the stock can get going and keep moving higher. Don't like that red bar right there, but if it switched to where it had a tail under body and it was closing near the high of the bar, that would make me feel better that yes, it's starting to gain some strength and it's ready to move higher. So out of these stocks, I really like Roku has been excellent. I like the financials today, and Netflix obviously, but Netflix has gotten a little bit ahead of itself. I think for a nice grinder where you can buy some in-the-money calls that are pretty cheap, this sector looks good to me with earnings coming up next week. Might even set up for some option lottery plays. If you're not familiar with those, please look on my YouTube channel. I posted a couple of videos in the last few weeks on how we trade options right into expiration. Great play. We try and buy these options for pennies, and we try and sell them for 20, 30 cents in a last hour of trading. I think financials are going to set up well for this play. So what we would need later today is we would need a little bit of a market pullback. We'd need those stocks to show us some strength, relative strength, and then on that final push higher by the market, those stocks will have the tailwind that they need to push through the strike price and to present us with an excellent opportunity. So yes, I would be definitely looking at the financial stocks today. I like those a lot. So that's pretty much what I've got for you. I should probably mention something that we saw happening earlier today. We had a spread that we were trying to get done on MOMO that was in my weekly swing trading video, and we had the stock pulling back. The stock was down to here, and because a number of us were on that particular trade, we weren't getting filled and we weren't getting filled, and I thought that we should get filled. And then I told everybody, I said, listen, if all of us canceled our order right now to sell that credit spread for 20 cents, we would get filled on it instantly when we replaced it. So a number of members said, well, let's do it. Let's cancel the spread and let's re-enter it. As soon as everybody canceled it and they started to re-enter it, we were getting filled one after the other, after the other, after the other. I'm going to do a video on this and how market makers work. The bottom line is that if you are watching, let's say you're trying to buy calls on a stock, and you see the stock pull back, and you feel like you should be filled on those calls, but you're not getting filled, cancel the order. Cancel the order. When market makers know that it's a stagnant order and nobody's watching it, nobody's paying attention to it, they are going to lean on it and they will not fill it until it is absolutely to their utmost advantage. They may like the trade where it is right now, but they're not compelled to do anything because they know it's stagnant. When you cancel it, they go, dang, I wanted that trade. That was a good one. When you repost that trade, they go, take it. Don't miss it this time. Take it. And then you get filled on it. You get filled on it at a decent price. So if you've got a bunch of option trades working out there, you're not getting filled on them, you think you should be filled on them, cancel it. Let them know that this is a dynamic order, that somebody is watching it. So that's your tip of the day. Keep an eye on Netflix. I really like that. Keep an eye on the financials. I like Goldman Sachs. I like Morgan Stanley. I think those stocks have nice relative strength heading into the day. But overall, look for very subdued market action, probably for the next week, because the financials are not going to move the needle very much next week. Thank you so much. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. Also, please make sure that you check out my Twitter feed. Follow me on Twitter. I'm going to try and post a couple of stock trades early in the day. Yesterday, I posted SPCE. I posted Roku. Knocked the cover off the ball. This morning, I posted Netflix. I posted Morgan Stanley. Could have been making a lot of money if you're following me on Twitter. You'll also get my pre-open market analysis so you'll know exactly what I'm looking at today. I'll set up some guidelines for swing traders and for day traders each day. Again, thanks so much. We will see you Monday. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.